Showing slump in the economy, the industrial growth has slipped to 0.6% in February this year. The main contribution for contraction comes from power generation and mining output and poor performance of manufacturing sector. Factory output had grown by 4.3% in February last year. For the April to February period of 2012-13 fiscal, the industrial production growth is at 0.9%, down from 3.5% in the same period of 2011-12. The manufacturing sector, which contributes over 75% of the index, grew by a meager 2.2% in February, as against 4.1% in the same month of 2012. The mining output in February this year too contracted by 8.1% compared to a growth in production by 2.3% in the same month of 2012.
The situation is one where it bears out what I've been saying so far. I think there's a bottoming out. When I looked at the numbers, the capital goods on manufacturing have improved quite a bit. So there was a lot of concern that capital goods were not doing well, which seemed to suggest that maybe investment had slowed down. So some revival there is, I think, good news. But, the bottom line is I'm glad that it's not negative. It's very low. It's not anything that one can point to as indicating a robust return of growth.
Meanwhile, snapping the 5-month rising trend, retail inflation declined to 10.39% in March as prices of vegetables and protein-based items eased. The consumer price index-based inflation was at 10.91% in February. The inflation, however, continued to remain in double-digit terrain for the fourth consecutive month in March. The prices in the vegetable basket eased to 12.16% in March. Inflation in protein-based items like egg, meat, and fish stood at 14.36% during the month. Among all the constituents that make the CPI, cereals recorded the highest inflation of 17.55% in March. Business Desk, DD News.